Okay, that was way.
What?
That was
That
way.
is crazy. Whoa.
That caught me off guard, though.
That caught me totally off guard. I was like, whoa, wait a minute.
I mean, normally we have, some time to just.
No, like, yo, it's like, yo, we here.
No, now I need to find it and share.
I know, right? It's been the classic, but I feel like this is going to be like the very last time that we ever use this.
That's what it's feeling like.
Yeah. Whoa.
Jesus.
This is crazy. What's up, everybody? I am Mark Monroe, accompanied by my wonderful co-host, the wonderful, the galactic.
Okay.
She's my co-producer, co-creator, and good friend. The wonderful, astoundingly dope investor, dope trader out here in these streets and hella traffic. Give it up, people, for the wonderful
jolyngc in the place to be. Well, what does it, cousins?
We got it. We actually got it. We actually got it like right there on time. That is so dope. That is so dope. Like everything. Like I can't. Yeah, y'all don't understand. Like I've been trying to do this like a lot, and it's been a long road coming, Jolyn. It's been a long road coming. But shout outs to each and every single one of you. Who was first today? Because I have a feeling that I think I know. Oh, do you know who it was today, Jolyn?
Well, on my end, it says Brother Jalen.
That is correct. Jalen was first.
He was first. But wow, there was a lot of people that tuned in right at 5:31. Normally,
that's dope.
If it's a few of y'all, then I'll say it, but like there's at least 20 of you that were here right at 5:31. So I'm just gonna say hola, hello, etesen,
Jumbo,
ni hao. That's all I know. That's it. And oh wait, it's not morning. I was gonna say Ohio because I am mass, but it's not the morning, so I can't say that.
Well, y'all, if you haven't subscribed, just go ahead and hit the subscribe button down below because we would totally appreciate that. Alongside you smashing that like button, apparently at the time of me saying this, it's 141 people that have liked this video. So shout outs to each and every single one of you. But, we would appreciate it if it kind of reflects the same folks watching. But don't worry, we'll earn your like tonight. Anyway, also, if you want to be in the know just like how Jalen was, go ahead and hit that bell. Yo, this like feels very, very nostalgic. Like it's very rare for us to use this part of the platform. But y'all, we're going to be coming through with some different like portions of, the Come Up series where we're going to be testing out new looks and feels. I think that you guys have seen it. We've been a little bit galactic, a little bit futuristic in our thinking, and we want to keep pushing that envelope. Next year is going to be even further, but we'll get into that later on down the road because we got some stuff to discuss today. But yeah, so it feels like, this is it. Take it in for the very last time. You'll probably see us where you see that if I'm speaking, my box is, highlighted, or if Jolyn says something.
Is it? Oh, mine doesn't do that on this side no anymore.
Oh, okay.
Yours does that? Mine doesn't. Oh, well, Zoom is ghetto. Such is life. Here we are.
Okay. Well, all right. Shots fired. So, Jolyn, how do we do in the markets today?
Yo, okay. So, first of all, what does it, cousins? It's Tuesday. So let's talk about what went down. So we have the Dow, which was up at 54.77 points. And let me just say, like, Mark, okay, so I don't know where I was going. I was going somewhere, but the last video on my phone was of the Come Up series. So it was playing through the car audio. And I realized that saying the points that it went up Like there's no context for it. So I really need to start telling y'all like what the actual level is at. So I'm going to be doing that for both. So, yeah, you know, for our audio learners here. All right. So I told you that the Dow was up 54.77 points, and it is now currently at 36,142.22. The S&P 500 was up 18.10 points, which brings it up to the 4,700 level with some change in 90 cents. Then we got the NASDAQ, you know, doing the Lord's work, up 120 points, actually up 120.01 points, currently maintaining a level of 15,973.86. We have the VIX at 16.37, the 10-year Treasury note, 1.635 percentage points. So all in all, I would say that was, you know, those are decent levels. You know, we'll talk more about those levels tonight. There's so much to get into, Mark. Okay, anyway, heading on over to sector performance. Can I get a shout out for my two favorite sectors? We got consumer discretionary and technology. And then the other one, which I personally don't care about, but some of y'all might, health. Those are the top three. I mean, I care about my health, but as the sector, you know. Anyway, then for the bottom three, we got utilities, consumer staples, and real estate. So we gave you the top three and we gave you the bottom three, and there's a total of 11 sectors. And so you can see based on what was shared today, what that sector rotation is looking like. Heading over to pick performance, which of course is always subject to change. FYI, we have Lucid coming in at number one. Lucid was out here today, 23 point, what does my handwriting say? 71%, y'all. And a day, and a whole day. No, I'm just kidding. And then we have Home Depot at 5.73 percentage points up. And Tesla with a respectable 4.08%. Okay, so Mark, remember when Tesla went back down to the 900s for like a little sprinkle, and then it was like, psych, back
yes.
happens. For the last three, as far as performance goes, we have XPO at 1.38%. To the downside or negative. And then we have Robinhood 3.12 percentage points down. And then SE, C Limited, we got 3.82 percentage points down. So look at that range, y'all. 23.71% for Lucid and negative 3.82% for C Limited, which in the grand scheme of things, that's not really that much. You know, that's a nice, decent little pullback for someone who's looking for a potential entry after some due diligence.
Hashtag facts.
Okay, so Mark, we have some questions today, but let me just put this on the table and on the record. Okay. I would like to talk about my favorite sector, or one of my favorite sectors, consumer discretionary. And also, I would like to look at charts for NVIDIA, XLY, TSM, and Amazon.
Okay, let me just make note of that. Yes. So you want NVIDIA,
XLY,
okay,
TSM, and Amazon. It's not just me that wants those. There were some questions around those ones. So
okay.
But even if it was,
can I also do a bonus one today, which is the SPY?
Yes.
Also.
Yes.
So we have NVIDIA, XLY, TSM, and Amazon.
Plus the SPY. Yes.
Okay.
Okay. So then also we had some questions. So. Okay, there's a lot going on. I feel like this is distracting me. Like this old school Zoom is like, it's throwing me off my game. I'm trying to hold it.
I was like, what?
I feel like I got like on my lip. I keep doing that. There's a whole lot of going on. Okay.
Oh my God. We good?
Yeah, I'm burning a candle, but maybe I should have burned some sage. Okay. So yeah, we have some questions. But where do you want to start? Maybe we should start with
some charts.
Well, if you want to do charts, we can start with charts.
Hey man, I'm coming. Look, I'm coming through. I'm coming in hot. So let me just go ahead and take a swig. How about this? I'll do a few charts. And then after that, I will go ahead and switch it back to some questions. We'll go back and forth. We're going to kick it old school. We're going to take it back to, we're going to take it way back into time.
Okay. Cool.
All right. All right. So, and I'm also going to show a few things, some of my favorite things that I like to use when it comes to also markets, if that's okay as well.
I think that would be a fine contribution to this evening's YouTube live.
Perfect. Okay. Sorry, I was watching a movie. All right, so let's start off with the SPY, because I think that the S&P 500 really kicks it off and it's a high gear. So here we are in our wonderful favorite friend called the S&P 500. So do y'all remember this? Like, now notice nothing has changed on this chart. Absolutely nothing has changed. The only thing I may have added that automatically comes through is the 5-day, 21, and the 50-day EMA moving averages, so exponential moving average. But outside of that, this chart has pretty much practically remained the same. Like, let me just take myself off of presentation mode. When I tell y'all, everything has remained exactly the same. So I don't know if everybody remembers back in the time when I did this wonderful thing called a magic trick. And when I did that magic trick, it was more so in a sense, there really was no magic behind it at all. There was actually absolutely zero magic. What it was just some simple technical analysis. So let's go back to it, because a lot of times it's like, okay, hey, well, if you can put out a trend, then you're good to go. So we're using TradingView to literally pull up the S&P 500, aka the SPY ETF, which ultimately tracks a lot of your, well, pretty much every company that's in the S&P 500 in an ETF format. Okay, so this is, I said, a year to date, but I actually, if you remember, I drew it all the way back to really around that October/September timeline where we hit those lows, highs, and then retested back in 2020. And then what I did was I just drew a line from the top side and also from the low side trend line. And ultimately what happened, we created somewhat of a range. Now, of course, in the very, very beginning, you're not going to see these things happen. You have to start to let things cook a little bit. And that's what we did. If anybody remembers, it was probably around the time that we got to about here, where we said that we were going to trade. It was pretty much around this time of the year. TiVo, if you're out there, or if anybody out there, come up, cousin, go ahead and, keep us honest by giving us the timestamps of when it was actually talked about, because, I do sometimes tend to talk a lot. So there's that. So one of the things that I did, though, is in this line, you can kind of see that there's this beautiful wave of where we hit the top side, and then essentially where we typically will resist from that top side line. Now, does it mean that we will always resist it? No, because if I come in even closer, as you can see, we've broke out quite a few times. But if you notice from those breakouts, we didn't stay above those lines for very long, except when we got to April and May, and then essentially we saw that there was this major pullback within the S&P 500 where we came down to the 50-day EMA, just like everything else, we pinged it. And the interesting about this, around the same time, around May 12th and May 13th, that's where we saw the market really start to rotate. So a lot of this was due to financials, industrials, and energy, excuse me, that were doing very, very well, like throughout the year. And then in the beginning of the year, we saw like, tech and consumer discretionary and some of those high flying names, even in communication, taking a dive. But as we all know, that those things couldn't last forever. So ultimately, we saw that money started to rotate out of those names, and then they started to go into technology, consumer discretionary, and in some retail, as well as communications. And thus, here we have it. We've pretty much traded within a range. We've broken out a few times. Now, this is on a daily chart. If I do it on a weekly chart, then as you can see, it gets a little bit wonky. So we're just going to keep it simple and just look at it from a daily. All right. So I don't know what just happened to my line there. Something's weird there. Anyway, so if we look at it, oh, well. Anyway, if we look at it, I can easily just redraw it if we need to. So I'm going to draw this and extend it out. But if you notice, we kind of like created some channels here within this where we pretty much trade it within a range. And we haven't really quite broken that range. We pretty much stayed on schedule here. And so when we look at it moving forward, as you can see that we've kind of like, we temporarily broke out here on November 5th, and that was pretty much at the height. But as you can see here, we came up to challenge that high and we actually rejected it today.
What's the
exactly here? So the here is actually at 470.74 for the high, but you know, if nothing's ever really a perfect science. But if you look at it, then we came back up today and we challenged it at 470.48. So here's the thing. Now, this is where we start to look at it. We could potentially reject it for a temporary, for a few days, especially since we're in the period of November 19th. Shout outs to Dante Haynes, my brother. It's going to be his birthday. Shout outs to you if you're watching. But also, we could possibly come back a little bit and come back to retest these levels at the 463. Now, is it going to be short-lived? Very much so. You can see a lot of volatility come to the market, especially on monthly expiration dates for options. So just something to be cautious about, nothing to be overly cautious on, but it could also potentially open up a buying opportunity over these next few days. As you can see, we probably have been trading within a range of low volume. How do I know that? Well, let's open up our friend called this. And this is pretty much the buy-sell volume right here. So I'm going to actually flip these two so that way you can kind of get a good gauge of where we're at. So this is literally the buying and selling volume on a day. So as you can see today, we actually had a significant amount of volume here on the SPY where we had 36.16 million shares that were bought. But on the downside, we had about 12.76. Now, if you want to get even more granular and looking at it on, say, for example, 1 hour chart for the day, let's look at it on a 1 hour for the day. If we look at it, then essentially, as you can see, you know, it was pretty much all over the place. If we come back to like about a 4 hour, which if I zoom in a little bit, this kind of like tells the whole story, the tale of the tape. So during the beginning, we saw a huge for the first 4 hours, we saw a huge uptick swing. Earlier today, and then towards the downside, we had, or towards the backside, we actually had a lot more selling volume that was taking place of people taking profit. And this is going to be happening typically on monthly expirations, even like times of quadruple witching weeks, where you start to see that the volume starts to slow down until we get closer towards the expiration, and then you start to see more volatility start to pick up. Nothing to really get really overly cautious about, but just something to just keep in mind as you move forward. And of course, for those of you just listening via audio, I'm using TradingView as a precursor for you to check it out. So that's one of them. Now there's this other thing called VPVR. Now this is another thing where we're looking. So instead of me looking at it on a 4 hour, I'm actually going to look at it on, say, for example, a 1 day. Now, the interesting thing about it is it's able to tell you where the top and, say, for example, the bottom side is, especially looking at it from the rounds of support. So as you can see here, there's a heavy amount of, say, for example, activity here that if we came all the way down to 433, then this would be a significant amount of volume to essentially come back in. So if you notice, the more that you come out, the more that you come down to here, like where you want to see is like kind of like this baseline. Which is here on the right side, which is pretty much an area to let you know exactly where there would probably be sellers or buyers and sellers probably stepping in. So at this point,
the level.
Oh, okay. So really the levels to really pay attention to, as you can see here, there's some selling volume here where we can see some selling pressure. If we fall below 463, we could definitely see some selling pressure here. But then where we start to pick up and we start to see around 457, 455, and then clearly the further down that you go, it starts becoming an even further buying opportunity, just as a heads up. But for the most part, where we're looking at, we came down and we really touched the level of the November 12th, which was exactly at 469.28. We bounced right off of that, and then we ended up at 469 and some change. Exactly like I said, where we were November 9th. So something to pay attention to because levels do matter. But at the same time, it's, there you have it. And that's the SPY. So as we move forward, I've already hit my prediction price target for this year for the S&P 500. So really the things that you want to look at if you're looking at it on a bullish standpoint, you will probably look at it around 48.30 for the S&P 500 as a level target for the bullish case. And then maybe like probably as a very base case, probably about 47.70 in the S&P or AKA the SPX. So those would be some interesting levels to watch.
Great.
And again, that second indicator that I just showed you was VPVR.
Okay, so for let's go to Amazon.
Okay, we're coming in hot today. Okay, give me 1 second.
Okay.
And now loading Amazon. Okay, so here we are. We've got Amazon up on my chart. Okay, so was there any specific questions that was for Amazon, or do we want to just like dissect the chart itself?
Let's dissect the chart first, but I'm sure there was a question about Amazon.
Okay.
I think it had something to do with, well, one of the questions is why Amazon doesn't move in tandem with Rivian. Does Wall Street want to shake us out of positions? So that was one of the questions that had to do with Amazon, but really it was a Amazon chart request to see if we're going to break out to all-time highs by the end of the year.
Here's the thing. If you're thinking that Amazon and Rivian should move together in tandem, that's not going to be the case. I mean, Rivian has picked up its own set of steam. It has its own cult following, and also like companies have their own cult followings, especially when it comes to the stock market. As you guys can see, if you go through any social media or just like seeing exactly how stocks perform. I mean, once upon a time, Amazon had a very cult-like following, kind of like Tesla does. But Amazon's gotten a little bit older. And so now you're starting to see a torch being passed within the stock market. Now, is that saying that Amazon is on its last leg? No. Amazon's holdings, I think as of last week, was about 21. The value of their holding was about 21 billion in Rivian. I'm probably sure that it's way higher than that. But to think that Amazon will fall just because of Rivian, no, not at all. Amazon's probably going to sit there and hold for the long term. And if they ever need to pull cash, then they can do that. But at the end of the day, I don't see the reason why Amazon should move in tandem with, say, for example, Rivian. That would be like Apple and Microsoft move tandem, or Apple and AMD run in tandem, or Apple and, say, for example, NVIDIA run in tandem. Just because of the fact that they are in the same space, or just because of the fact that the company has invested into it, that doesn't give it reason. They're completely different sectors. There's completely different followings and whatnot. The reason why you're seeing Amazon kind of like in this range is, one, because the stock is, I mean, it's not cheap for the average individual to buy as it pertains to shares. That's the first thing. The second thing is also we're getting geared around the time when Amazon really starts to do some of its damage for the year as we go into the holiday season. One of the major things that everybody was watching for Amazon this year was really in the sense of consumer spending. Now, given that we saw the consumer spending numbers up about 1.7%, which is the highest since, I want to say, 2020 or something like that, then essentially this is the second highest. I think that this is something to definitely be a read. Or wait, I may have my data wrong. So let's
looking it up right now.
Let me just go ahead and fact check myself there. We're at the highest level since I want to say March of this year, actually. So as of March 2021, this is the highest that we've been as it pertains to consumer spending. Now, also take into consideration there's things like inflation and all this other stuff. There's a lot of CapEx spending that Amazon's doing. So a lot of folks are really starting to chew onto the numbers and everything else, and they're really starting to do a jockeying for value. So when you start to see this right here, this is getting to a point where it's decision-making time. Is it time to buy, or is it time to essentially like let it go, or essentially sit the sideline? My base case for this is that essentially we'll probably see Amazon come back up to these levels once that it is able to essentially establish itself and get out of this volatile period. I think that the first thing that we got to get to is really get that, like when you see all this choppiness here and all this open dead space, this is where you have to go through this period, and it kind of feels like a choppy moment where we're just chopping. But as we chop, here's the thing to pay attention to. As we're chopping, notice how we chop, we're still chopping to the upside.
And what level did you say that the choppiness was at? Because all I heard was here.
Oh, sorry. So the level that we've been kind of like trading in is a range between 34, let's just say 34.75, and a high range of, let's say, 3,600. So we've been chopping, but now we're no longer chopping to the downside. So I would probably say the new low side is probably about 34.13, and the high side of really where we need to get to break out, which this could possibly be forming a solid bull flag. If you look at it from November 9th until today, you're starting to see a slight bull flag starting to be formulated. And we already have the bull trend, which is showing you on the 50-day, the 21-day, and the 5-day. So essentially what we could be seeing is that Amazon is preparing to actually go for a slight breakout. And then essentially once it breaks out of this with conviction, we're probably going to challenge these levels. So I would probably sit in the levels of, just to make sure, because we're going to challenge the levels of about 35.90 to about probably on the high side about 3,700 for the year. And then essentially I expect that when we get past a lot of this inflationary data, then next year will probably be Amazon's rebound year where they probably come back with vengeance.
Hold on, I'm writing my note down.
That's fair.
Next year. All righty, moving on to, now we have TSM.
TSM, the last holdout. Okay. All right, so here we have TSM on a chart. Let's go ahead and set it. We're set on the daily, so we're good here. So kind of like the same thing. If we go back and look at Amazon, you're starting to see some of the same similarities here. The only difference is that we kind of come down to those lows. But again, look at exactly where we close at. So we closed just a little bit under where we should have closed at, which is actually at 118.17. But I mean, there's no such thing as a perfect science. So really what you're going to be looking for tomorrow is the confirmation of, is TSM going to the low side, which low side kind of places it at 117.56. And really, essentially, if we can't hold that, then we're going to come down to about the 116 levels for TSM. And the biggest thing is, again, really U.S.-China trade relations, especially as it pertains to Taiwan. Will China really start to really take in more of its grasp? I don't think so. I think that in the end, I think that they're going to kind of back off on the frontward-facing side. I think that also U.S. is also looking to make significant investments into Taiwan. So essentially bringing forth their expansion here into the United States. This could be huge. So honestly, I think that this could be somewhat of another flag formulating, but we need some more confirmation here.
Okay. Oh, all righty. Now moving on to XLY. I guess we could have covered XLY when we were going over Amazon, but
I know, right?
okay.
Okay, so as you can see on XLY, we've kind of been holding pretty steady. One of the major things, shout outs to Home Depot today and their earnings report, and then alongside with a strong consumer spend. I mean, honestly, Home Depot has had a phenomenal year. And then on top of that, so really today was really about Home Depot. I think you also had Nike partake in that. And on top of that, you also had Tesla do some damage as well, up 4%. So when you have that type of movement that takes place, and what we could be possibly seeing is a rebalancing effect that's also taking place in some of these ETFs. Mm-hmm. So that's something that I want also people to pay attention to as we go into the close of the year. You may not really see it within, say, for example, the XLY ETF, but you're definitely going to see it in places like XLF and XLK, which you could probably be seeing that people are probably starting to reshape and rebalance their portfolios as it pertains to index funds. Hey, do I really want to have that exposure into XLK, or do I want to have it in XLF or wherever it is, or XLE? But in the grand scheme of things, I think that we found a pretty solid level where we were able to bounce off of. And then, of course, we closed just a little bit shy of, again, that level of 207.13 back on November 3rd. But grand scheme of things, this stock is, I think, on its way to definitely climb and go back and possibly challenge some more of those highs.
Now, okay, so remember when XLK did another rebalancing and it got rid of some like the consumer, or not consumer, but communication services, and it had that period where that was like a newer ETF, aka XLC. And there was, it took a minute for it to catch its bearings, so to speak. Now with I've noticed that with XLK throughout this year, especially as we have the Q1 dip in tech, Visa and MasterCard were pretty much holding XLK up while money was rotating out of tech and into other areas. So the question is, once there is this rebalancing and Visa and MasterCard are now shuffled into XLF, where does that leave XLK if it's predominantly tech heavy, especially?
I think that's going to be good. I mean, if you think about like Microsoft and like a lot of those, like Visa, MasterCard, and PayPal, those companies alone make up about, I think they're like the equivalent of $1 trillion right there in combined market cap. I think the thing is, though, when you look at especially like where they will fall into the XLF and moving out of tech, I really feel bad for XLF because I think that you're going to probably see a valuation or a market cap go from, about 38 billion to about 31 when we really look at it in the grand scheme of things. So which means that, or not market cap, but their weighting. So we could probably see that weighting drop and essentially gain in, say, for example, XLY, XLC, and XLK, because of the fact that if you think about it, Apple, what is it? They represent, 10% of the S&P 500. And then essentially you got Apple, Microsoft, Facebook, Google, two of them. And then on top of that, you also have Amazon and a few other players sitting right up there at the top alongside with Berkshire Hathaway. I mean, honestly, you kind of put yourself into no man's land where pretty much the market is kind of telling you that the S&P 500 is becoming more so tech focused. So again, honestly, and looking forward, I don't think that this is going to hurt the XLK ETF at all. I think if anything, you'll probably start to see that other positions within that XLK, like for example, imagine NVIDIA climbs up into that foray now, because NVIDIA, in my opinion, will probably be another company that will probably be another $1 trillion company in the long run. There's going to be more companies now that we're starting to get into a world of these valuation numbers are going to start changing. And we could probably see a new standard being written here. I don't see that type of framework being established for any of the financial companies. I just don't. I don't see any of them really being at a place where they could possibly be priced at $1 trillion over the next 3 years. A single company, singularly. Collectively, you can do that. But on a single company, I don't think that that's going to happen within an XLF.
Yeah. Okay. So, I'm going to be reevaluating positions for 2022 as far as the new stock crush. And there's a couple on the list, how stock crushes work. It starts off as, it's very casual, maybe a coffee date here or there, aka on the watch list. Then as I see the performance, show improve, boom, it could escalate to something more, Mark. It could be a potential, okay, well now you're a stock crush. But First, start on the waiting list so we can see, see what you're all about, because there are people that look good on paper. There are stocks that look good on paper, but that doesn't mean that it's going to do what you need to do based on your goals. So, I'm
just going to say this, man. Literally, I'm never loyal to anything on the market, though that I have my favorite companies. Y'all know who they are: Tesla, AMD, NVIDIA, pretty much anything within the tech space, because I live my life in it. Where some folks deign to be there. I mean, honestly, it's like I eat, sleep, drink, and breathe this stuff on a daily. So again, that's the place and where I'm at. Doesn't mean that I don't have appreciation for the other things out there, but honestly, those are the companies I like. But at the same token, I'm never going to be that type of person in whom, especially as a trader, I'm not going to be loyal. Now, stock wise, like if we're talking about true stock crushes and true, like, when it comes down to ownership, really, you can really say, okay, hey, who you're really married to when you buy the stock. Right. Exactly. When you buy the stock, or like when you're like holding for 5 to 10 years, that's different. I mean, you last. I mean, at that point in time, you lasted longer than some Hollywood relationships and some athletic relationships out there. So again, when you buy something, then that's different, because now you've claimed loyalty and you claim ownership. But when you're trading, there's no such thing as loyalty within trading.
There's not, because honestly, like with the stock crash for this year, there were 2 this year that it's intermingled, and it ended on FTNT, but the first half of the year it was Amazon, because Amazon some things. I
feel like FTNT was not really the relationship. I feel like FTNT was more so the jug.
Well, I mean,
FTNT was the joke for the culture. Who knows? Maybe there may be another one cooking in the background.
It really did do, year to date, the performance is like over 130%. So, that totally caught my eye. I was like, okay, FTNT, what's up? But those positions, the stock crush position is constantly changing. That's where there is no loyalty. But for me, with like Stock Bay, aka SMH, it's bigger than just, me just giving it that label. There are things that it's attached to, like, because it's primarily chip makers, chip designers, chip manufacturers, what have you, that right there feels like this other bigger part of my thesis about leisure. And, those companies make that stuff possible. So
correct.
That's why
Speaking of chips and speaking of like, stock base and stuff like that.
Yeah.
Let's look at NVIDIA.
Yes, let's look at NVIDIA.
Because NVIDIA's had a glorious run for 2021. Yeah, and honestly, if we really want to keep it funky with the people and call spades, I mean, honestly, this is NVIDIA over the past 5 years. Please put some respect on their name.
Yeah.
Put some respect on NVIDIA's name. Like they've literally, this is 2018. Now, of course, we had that fall into December, but hey, things happen. Mm-hmm. And then we had this run where we came back up to the levels of where we dropped. And then of course, it kind of like felt like the stock correction, the market, retest. And then after that, it's just like, all right, I'm running. And then it's like, yo, I'm not done running. I'm still not done running. You know what? Let me just go ahead and do this high jump and just go for the Olympic record or for the world record. And boom, here we are.
I mean, that's big energy all day,
So, yeah. So shout outs to you if you were definitely in the NVIDIA plays and, held those on. Yeah, honestly, put some respect on their name, just off top. Now, of course, we've been hearing some rumblings about NVIDIA. Now, mind you, I'm looking at this on a weekly base chart. So if we want to look at it on a daily, that's fine. Notice that we've kind of like, we're kind of like pulling back and, you definitely see some profit taking. But notice where we came down to, which is the level of about 297 and some change. The level ultimately was at 298, but even in the same day, we ended up higher and we actually closed at the November 5th level, right before we kind of like just blew it off the top and went for like the ultimate level at 322 and then came back down. So again, where we could possibly be seeing this is there could be another leg up. Now, there are some potential risks here. One, NVIDIA's earnings is right around the corner. Now, if you know anything about NVIDIA's earnings, they can report a solid earnings beat and then still break your heart. So understand that. Now, it could be a mixed bag because, of course, the sentiment could change. There's also talk about SEC not SEC, but EU investigation as it pertains to their acquisition of ARM. So that could be a huge blow to NVIDIA, not the killing blow, but it could be a significant blow to NVIDIA acquiring ARM and could possibly put that deal on ice. And if it does put the deal on ice, it will possibly force ARM to actually go public because of the fact that, of course, going public allows you to raise X amount of capital, especially when you take $35 billion off the table. So we're definitely in a wait and see approach with that. And a lot of folks are asking, hey, Mark, if this deal goes bad, then is that bad for NVIDIA? Well, not exactly, because of the fact that they get their capital back. And then they can literally just form themselves into a strategic partnership where essentially they work exclusively on specific things, though I don't think that that's going to happen. I think that in the grand scheme of things, they will have to still go through some red tape, but ultimately I think that this company will acquire ARM. But it's just a headache and a hurdle, and it's just something that they're going to have to go through. But at the same token, if you look at what NVIDIA is producing on Omniverse channels, as well as what they're producing on even an AI data center and cloud, I mean, this company is going to be just fine. I think that there's still more upside for them. And like I said, NVIDIA is probably my pick as the next projected company that will probably be worth $1 trillion.
That timestamp is at 6:13 p.m. on November 16th.
Yeah.
Okay. So we do have, I want to get into some of these questions that don't have anything to do necessarily with lead shots, but we did get through all the charts. So totally. All right. So here's a question. All right. Someone says, last episode, Mark said it's not easy to sell 4-digit contracts. Can we please explain this? Thank you. I'm going to be doing sound effects for the voices.
The reason why it's not easy is because when you buy contracts, it's probably easier to buy things, but even then when you buy 4-digit contracts, it's not that easy because of the fact that buying at that lot, then essentially you have to expect that the movement in the contracts will also increase in value, especially if you're buying in lots of, hundreds. And then the same rules apply when trying to sell 4-digit contracts as well, because then it's like the price fluctuation. Then on top of that, essentially, you could possibly bring forth attention to yourself. And, 9 times out of 10, your brokerage also has a ruling of how many that you could possibly acquire at one point in time. And then on top of that, how many you could sell at a point in time. I mean, that's just kind of like something that you'll have to deal with when it comes to market makers and making sure that those orders can be executed, even if you try to execute it at market. When you try to buy them, it's like, it could be a little bit tough because you can kind of show your hand to everybody else that's out there watching, because there's other folks that are on the institutional side that are watching the options chain as well. Mm-hmm. And then on top of that, when it comes to selling, it can also trigger some things as well. So it's never really easy because of the fact that you have to think about that. And on top of that, being able to actually get out of the position at specific price points that you want to get out at. You'll never get out specifically at the price point. That's just not going to happen. So for example, the premium that you're trying to get out is at, let's say, $10, but you have 4-digit contracts. Mm-hmm. It's going to fluctuate between a range of, let's say, 10 and 1050.
Yeah. And that's where shaving off can play a part as well, where you just sell, X amount at a time until you're out of that position. So there was another.
I think the max that you're allowed to do is about 3,300.
Okay.
At one point in time, per time, so. Yeah, I'll just leave it there.
Okay. Okay, so another question is, hold on, where did it go?
Surprised nobody's asked me about Rivian.
What specifically? Because there was a question about Rivian that you already
Oh, I already answered it. Oh, was that the Amazon connection?
answered.
Oh, well, I'll say this. Yeah, Rivian has started trading on the options market, but I will say this, be careful. I mean, now if you're a short seller trying to short it, this could be possibly something where you could possibly get caught up in a short squeeze movement. Personally, me, that's not the type of fight that I want to be a part of. I kind of like understand the plight of what a lot of institutional investors are saying, though that we're in a new valuation type of market, especially when it comes to the EV space. Though that at the same token, sales are still sales. And then, if you ain't got those kind of sales, it's kind of hard to place you at that type of valuation over that many and over that times of earnings. I forget what their PE ratio is, but it's something ridiculous. And essentially you're talking about years in which that they would have to stretch that out in order to reach that type of valuation, which is like, is this something that can be truly done? I'm a huge fan of what, the actual company is doing. I think that, they're onto something. They're definitely doing it the Tesla way. But at the same token, it's like, the biggest part that I agree probably with a lot of folks within the industry is more so in the sense of getting their manufacturing process up to scale. And Rivian's just not there yet. So I'm skeptical of the valuation of a lot of the auto manufacturers' valuations. Even sometimes I'm a little bit skeptical of Tesla's. I mean, that's just me being a realist. But at the same token, it's like, you gotta have some type of social proof there, some type of proof that says that, okay, hey, that this can happen, this can work. And yeah, that's really where I'm struggling. And, I'm probably sure that a lot of fund managers out there are struggling with that too, because that's a tough pill to swallow at that high of a valuation. That, honestly, that you don't even think that they wouldn't meet. And I'll just give you a little bit of background. It's kind of like, I'll bring it back to private companies, like startups. Like if you've ever, like, I don't want to go to the CNBC Shark Tanks because, let's be real, that stuff is kind of like, rehearsed and it's not real. They may get funded, but that whole theater part. Here's where it really comes down to it. When you normally go down and sit down to a venture capitalist, they're going to ask you at what valuation are you raising capital? And when we sit down and think about it, it's like if they offered you something at a high valuation, you really got to think about it, because then you get priced at a valuation. You sometimes can price yourself out in a valuation that you yourself cannot meet. And when you can't meet those expectations over a period of time, because there's going to be a grace period, but when you can't meet those expectations, then that's when it becomes a dangerous game. And for many startups, you could possibly be in a position where you could lose your company. Now, of course, Rivian's a publicly traded company, but they also have board members and everything else, as well as folks in which that are large institutions, in which that they could probably be like, okay, hey, this valuation is ridiculous. Now, of course, this is what the publicly traded markets believe. But then what happens when we have where that moment comes where it's like the emperor has no clothes on? That moment will come, and then people will have to sit back and say, okay, hey, well, the traders, they'll be like, this was a great trade for me to get in and out of if you were, trading it. But for the average individuals, it's like you can see a significant amount of, say, for example, your value significantly decrease, especially when you start seeing those large pockets or those large tranches of holdings come off of the table. Do I think that that's going to happen for Rivian? No. Because Rivian is going to keep doing what they're doing. They're not the type of company to overpromise and under-deliver. They're quite the opposite. And essentially, they move in stealth for quite some time, and they just deliver. So I haven't heard a single negative review about their vehicles since they've released it to the public. Now, of course, the biggest part that they have to figure out is infrastructure that surrounds it, which is going to be the huge part that really makes up that entire valuation. It's not going to be like, for anybody out there that's trying to invest in EVs, it's no longer about like how many cars you can sell. If you are literally in a conversation and people are talking about cars that are being sold, then honestly, the conversation's over, because that's no longer the arena anymore. The conversation is more so in the sense of the innovation, the process, and the infrastructure that surrounds it.
So you had mentioned institutional eyes, and earlier there was a question, like earlier in the week, in the DMs, or maybe it was part of last week too, or over the weekend. Anyway, the point is, the question was, now with how, with institutional eyes, like on the options chain, and especially when, we're out here trying to close the racial wealth gap, is our movement being targeted? Do you see it being targeted in that way where, they're trying to, maybe people are in this position and like the parents, for example, in the XLKs and the XLYs, do you see institutional eyes moving in a way that would be detrimental to a bunch of us, cousins that are in those positions?
No, and here's the reason why. You're talking about an S&P index fund. That's the first thing.
Mm-hmm.
So when you think about that, you're talking about pension funds, you're thinking about retirements and all those other like type of major holdings that a lot of folks, their capital is sitting there because of the fact that it's just sitting there growing over time and also paying a dividend on a quarterly basis. So, to say that they're targeting you, they're only targeting folks that are trading on the short term. So if you're caught trading on the short term, then yeah, you could be a target. But if you're trading on the long term, no. I mean, because if you think about it, if that's the case, then why did they create SPX contracts for 2025, 26?
Mm-hmm.
They did that because of the fact that here's a little secret. Don't be surprised, and I think I've talked about this before, but here's a surprise behind, say, for example, fund managers and stuff like that. When you put your money towards those types of funds, yeah, they promise you a small return of about, let's say, anywhere from 15 or sometimes 8%, all the way up to about 30%. Now, if you think about it, these are folks that are pretty smart, have access to some significant tech and some pretty proprietary materials. Do you really think that they're actually earning 8 to 30% just for you? No, not at all. They're literally crushing those numbers. They're crushing those numbers. And what they're doing on the backside is they're hedging that with being able to play long-term options alongside that. So then essentially they're boosting up the liquidity. Why? Because just in case they can run that as a long-term hedge and ultimately have that there as a safekeeper, or if they want to, there's this thing called bonuses also in which that they get paid. So not only do they get paid their management fees, but they also get paid bonuses at the same time. So if you have a fund that gives you a management fee of, let's say, 10%, and then at the same token, they take 2% as it pertains to a bonus when they're able to not only meet the benchmark, but exceed it to a certain level, then essentially now there's incentive. But make no mistake about it, it's like essentially they trade options too. That's one of the reasons why I showed folks on Well Wisdom. You go look at a lot of these funds, you'll see that they're trading in the options market as well. They're holding long-term calls or long-term puts as a hedge against what they bought. You also take into consideration that the fact that they may buy X amount of mutual funds that give you about a 20% or a 30% growth with dividends, but then at the same token, they're running options on the backside to essentially boost liquidity return. And they're doing that with your money. Like, that's the crazy part about it. They're doing it with your money, your cash. So to think that essentially that they're targeting you, no, they're not. You just happen to be playing in the same waters as them, especially if you're thinking in the long term, because that's how they think, especially when it comes to the options market. Now, of course, do they play in sometimes short-term markets? Of course. But for the most part, yeah. I mean, honestly, I wouldn't see you as a target, especially if you're thinking on the very long-term basis.
Okay. That was some concern. I feel like that concern comes up periodically. So glad you're able to address it once and for all. Okay, so okay, that was a funny question about FOMO. There was a question. Okay, that person. Okay, hold on. I'm trying to wade through some of the Googleables. Here was a question about PayPal. It says, is PayPal's over-reliance on its consumer side versus its merchant side an issue?
Can you say that again? I'm sorry.
Yes. Is PayPal's over-reliance on its consumer side versus its merchant side an issue?
Yes, very much so. Because then they're always going to be looking for an eBay replacement. And that's a dangerous game. That's a very, very dangerous game, especially it's like, I get it that they're trying to work on their vertical integration, and it's something that they should have done years ago. But yeah, that's a huge challenge for PayPal, because of the fact is that their payment system is fantastic. I mean, and alongside with some of the logistical pieces as well as the back end customer service, which was always phenomenal.
Mm-hmm.
But at the same time, it's like, when you don't have an eBay or some type of e-commerce that kind of like points hand in hand with that, that becomes a problem. And honestly, I don't know where PayPal goes from here. Maybe they can think about it in the sense of bringing more merchants to a decentralized format. So pretty much focusing on decentralized shopping experiences, or even possibly embedding yourself into the metaverse could possibly be a way of that.
Mm-hmm.
But eBay is going to have to think very long and very hard as it pertains to what is going to be their identity, because until they can figure that out, you're going to have investors that are going to still like invest and buy the company because of the fact of its history, its longevity. But yet at the same token, as we've seen on a lot of companies, just because they have history and longevity doesn't make them a company that you should be investing or that should be worth your money. And that's where it comes into it, because, we live in this market of what have you done for me lately?
Wait,
and really
eBay, but did you mean PayPal?
Sorry, PayPal. Well, technically both, because I feel like, eBay's,
Yeah.
but PayPal, honestly, like what is it that they've done for the market lately? What is it that they've done to excite people? And especially since you got major players that are now here,
Mm-hmm.
and another one that's coming in 2022. This is not a game for the play. This is one of those things where it's like, okay, hey, we need to figure this out very quickly, get into a boardroom and figure out exactly who we're going to do such a deal with, and literally stuff as much cash down their throat
Mm-hmm.
to say, hey, we're going to acquire this deal one way or another to make your board members happy. But yeah, I really feel for PayPal right now, because honestly, it's like they're in deep waters without a paddle. And honestly, it looks like the sharks are starting to gnaw at their boat.
You mentioned potential in the metaverse. You're talking about a decentralized e-commerce experience. There was a question about, do you see Peloton being in that space?
I can definitely see it, though that I think that Peloton's issue is the fact that their cost basis of being in these places is too high. I think that they're going to have to really reshape and rethink that in order to essentially, appease everybody. Really, it would be interesting to see if Peloton could link up with, Facebook, or AKA Metaverse.
Mm-hmm.
It'd be interesting to see how that comes into play. But then you still have to lower the cost barrier to entry. When I look at Peloton, Tonal, Mirror, all these other companies, Mirror was smart to get acquired by Lululemon.
Mm-hmm.
And Tonal, I mean, they're doing a good job of trying to, bring it in for athletes. Shout out to LeBron James on that commercial. Dope. Kind of made me think about getting one myself. But then at the same token, it's just like, I don't know. It's kind of like, it's one of those ones where it's like, yeah, Peloton is definitely going to have to think about it, because their best days as it pertains to bringing bikes and everything else home, mm-hmm. bikes and treadmills home, those days are over. Those days are officially over. Those best days are behind them.
Yeah, they were just...
And actually, it could be interesting. The metaverse and the omniverse could literally reshape and redefine a lot of companies that are becoming quite archaic, where their best days are behind them. This could be pretty much their comeback story.
I mean, it's going to have to be. If that's the direction that we're moving in, like, what else are they going to do?
Yes.
And they've just started pushing more of their digital membership, and people that don't even need the bike. So there was a question a few weeks back about the discussion on social media being obsolete. I don't know if you remember that episode, but it was, I think we were talking about it on A Different World when we were talking about the metaverse. But the question is, the outlook for Pinterest, and it says Pinterest directs users to brands. Is that something that's going to, be a catalyst for that company?
Lord, I don't know. Honestly, I don't know. I mean, because Pinterest is like Pinterest is like one of those companies. It has so much opportunity to like literally become something even greater than what it is. Like when you think about recipes, you could have had something which you could monetize. You could have monetized so many business opportunities off of it, which would have literally, we wouldn't even know in Etsy if Pinterest did, what they were supposed to do. I mean, honestly, Pinterest could have Pinterest could do a lot of things, like whether it's third-party sellers or even major retail sellers. But ultimately, like for example, if you think about it in the fashion industry, Ralph Lauren, like let's take a company like Ralph Lauren. They have so many different designers that they can literally spin off each and every designer that has an idea and literally have those things sold on Pinterest to get market data to figure out exactly what people like. You can literally recreate shopping experiences, just by doing that alone, and also possibly even building subscription models for, fixed revenue that comes through. But yet at the same token, we haven't seen those things coming from Pinterest. And I really feel bad because I really believe that Pinterest should have let PayPal acquire it, because I feel like they need each other. Because I really sit back and look at Pinterest's valuation and I say, well, is that really justified? What's the next thing for Pinterest? There's a lot of things that they can unlock. And the question is, why are they sitting there so long? So, honestly, no shade, because honestly, I can't even find my shades today, which is kind of sad.
You better find them. You're going to need them.
I will find them. But honestly, no shade included. But, honestly, until Pinterest figures it out, they're trash.
Dang. Okay. End the show with a bang. So I just got the word that it's time.
Oh, wow. Time flies.
Yeah, it does. 3 minutes over.
Well, can I just say something that's been sitting on my heart?
Yeah, of course.
I have a song in my heart and I'm going to sing it. I'm just kidding. So y'all, like, let's just run it back. And this is the reason why since we're being a little nostalgic on this view today, which is very rare to see us on a Zoom call. But I wanted to run it back for y'all. Like, and the reason why this is very dear to me, because, we talked about rolling fours. We talked about 70-30. We talked about, like, say, for example, looking at the things that are around you and saying, okay, hey, do they make you money? And here's the thing. It's like, I want you to kind of like take a step back and just think about all the things in which that, like, just sometimes just take that moment to just self-examine. What was the cost of wasteful spending? Really, I want you to examine that. What is the cost of wasteful spending? So the reason why I want to put this into your peer review now, you may not be doing that right now. And like a lot of you may be like sticking to the script 100%. But one of the things that I want you to think about though is like, put this in your mind now, because especially if you plan on walking away or whatever it is that you want to do, like financial freedom, once you've reached there, start thinking about those things now. Because if you think that, just by you going to spend money at a, Nike store, now, of course, Nike still needs you to buy things in order for your stock to ultimately gain value. So somebody's going to have to buy it. Somebody's going to have to stimulate the economy. But, it's really in perspective of the wasteful things. So what it really is the cost of wasteful spending. Let me give you a simple example. Say, for example, you say, okay, hey, I'm having a bad day, so I want to go and have some retail therapy. So I'm going to go spend, let's say, $1,000 or $500 on something. Well, what did that just cost you? One of the things to think about is like, If the first thing that you thought about was the fact that you could have put that towards something that would have appreciated in value and then use the profits to literally pay for that retail therapy, then good job. Good job. But if you just thought about it in the sense of just consistently spending your principal, then really you're working against yourself. Like that's the biggest thing right there. You're working against yourself. So if you think about it, like, you know, you guys have seen the charts and you guys have seen the Excel sheets and everything else. What I want you to do in moving forward, so that way you can understand exactly what this looks like, tonight, I'm going to give you homework. Like for folks who go buy bottles at the club and buy all these shots and all these drinks and everything else, I want you to just think about it like this. Instead of taking, and I'm going to, like, you guys have seen the document where it takes your initial investment. What I want you to do is I want you to go back and look at all the things in which that you spent this year, like just, you know, frivolous expenses. Go and look at your frivolous expenses and tally those up and then put that into the initial investment section on that spreadsheet. Therein, you'll be able to understand exactly the true cost of what it costs you for wasteful spending. See, this thing goes multiple ways. It goes one way in the sense of your investment, which gives you a discipline, a strategy, and everything else, and kind of like gives you what your life will look like if you stuck to the plan. Mm-hmm. But then I also want you to see the other side to it, because if you don't understand the other side, then it's not going to hit as heavy for you. So what I want you to do is go look at your expenses and the amount of expenses that you bring forth every year, and then put that towards that. Because then they're in for the, and I'm just talking about the frivolous expenses, not your livable expenses, just your frivolous, wasteful expenses. The things that you buy that are essentially just sitting around after you've used it, or essentially that, you know, whatever it is, go look at that and tally that up and put that in your initial investment column. Then you will find out exactly, truly in value, what is it that you've lost. And of course, we look at it over a 5-year span, because ultimately, the money that you spend today ultimately will have impacts on, say, for example, your wealth of tomorrow. I'll run that comment back. The money that you spend today will have impact on your wealth tomorrow. So again, that spreadsheet works both ways. Mm-hmm. Look at the initial investment that you're going to invest with, but then also go look at exactly what those frivolous expenses have cost you. So it's like when you think about like, okay, hey, I'm going to go buy this, or I'm going to go buy this, I'm going to go buy this. Do I really need it? And if you don't need it, and if you've spent it, go and look at all the things in which that you buy and then put that in the initial investment. You will probably start to see exactly, yeah, you're using the rolling forest calculator. Go ahead and use that. Go use the rolling forest spreadsheet. And I'll drop it in this description in the video down below after we're live. So that way you can have access to it. I may even create a Dropbox link so that way everybody can just download it for themselves. But honestly, it's like, I want you to look at it from the perspective of what has your expenses truly, truly cost you? How much of your wealth has been taken away from, how much of your future wealth has been taken away from frivolous or wasteful expenses?
Alrighty.
And on that note, y'all, thank you so much for rocking with us and, you know, literally kicking it back old school with us. I hope that you were able to grasp some gems. We got to geek out on some charts, talk about some levels, talk about some news related items, along with at the very, very end, talk about, you know, throwing it in there as it pertains to your money and, you know, how is it that you can project for the future. But not only that, but look at exactly what's costing it and what's costing you right now. Sooner or later, I'm also going to have to get into the factor of wasting time, but that's a whole nother episode. But until next time, I'm Mark Monroe.
I'm jolyngc, never spending wastefully. Well, I used to, y'all. I used to.
And this has been your come up. We will see you on Thursday with some special guests. Peace, y'all.